Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at the last print of 1108.25, down about 15 points on the day. But what's more impressive than the range we've seen today is the beautiful formations that have evolved on the, we got the jobs report out today. This, of course, is the 6th day of August, 2010, Friday. Look at it at a beautiful gap down. Tried to fill the gap on the S&Ps, but what happened? We ran right smack dab into the underside of the trend, which suggested a great opportunity following. You weren't really going to get the gap fill following the impressive move to fill the gap to go to the short side. Actually, didn't participate in this on a discretionary basis, regrettably so, but definitely was a beautiful setup that we certainly have to make mention of, because look at the formation there, the retest the underside of the trend as now resistance, and bam, down from 1120 to around 1105, 15 points in about an hour. Beautiful setup. Well, how did you know that the market wasn't going to continue higher, at least fill the gap? Well, if it's not, if you have the trend there on the intraday, if you have the trend there, you're certainly not going to look for a gap fill, maybe an errant move higher. But look at the proprietary indicators that we have. First and foremost, we saw yesterday was just a really quiet session. In fact, it's been relatively quiet, modestly quiet over the last week or so. We'll look at our portfolio performances here in a second, but definitely a quiet session was the case yesterday. In terms of the ES at any rate, the Dow I believe was a little bit stronger, the ES right in the middle, but we're going to look at the Russell in a second. Actually, we can go ahead and switch over to that right there. Look at the Russell underperforming yesterday. The Russell 2000 TF really underperforming, finishing at the low of the session, whereas the ES was actually near the high of the session. So definitely the Russell was the precursor to the indications. But what was going on? Well, you just really have to look at the day ahead indicator. Look at the certainly this is bearish below zero, bullish above zero. So for bullish here, this means you really want to be buying the next day's sell-off. So you really could buy yesterday, buy this gap, buy here, buy here. Conversely, we had this positive momentum divergence right here, so you definitely wanted to be buying on this day, at least in the Russell, but it wasn't the case on Thursday, as we had really a mixed indication. We had bullish here, and the market was holding, but this was suggesting bearishness was likely to come, and indeed it did, not only with the closed low of the session on the Russell, but certainly a break to the downside, a little bit of a gap fill, actually beautiful gap fill right there, and just cascading waterfall decline. Absolutely impressive is the price movement that we've seen. So here we are in the back in the ES, looking the same picture: bearish, 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 bearish. A little bit of bullishness, bearishness there, overwhelming. Price was making higher, but it's just a negative divergence, suggesting that price is going to likely fall under its own weight, as well as the proprietary indicator suggesting that the bears are going to maintain control of the market. Although in the daily chart, they're pretty much in control on the bullish side, but it's really a mix of conflicting indications, as we're going to go ahead and take a look. Actually, we'll go ahead and just minimize that. Here's a chart of the daily S&P 500 market, and it's really, we would certainly be bullish right now. We would have been bullish probably around 1100. We're at 1110 right now. We went back to neutral. We went ahead and exited our bearish exposure for a gain of 60 S&P points, around $3,000 per S&P contract, about 60% return in about, 3 or so months, 1, 2, 3 months on the official market timing. But right now we're neutral, went to neutral 1098. The market went on up to around almost 1130, 1125, 1130 we'll call it, but we're just really holding off. Why? Look at this beautiful swing point. This was a major move right here. This fib retracement right here was a major opportunity to get back in the short side. We mentioned we were certainly bearish there, to get back in the short side or add additional short exposure. Beautiful sell-off, so definitely an important level is this level right here in the market, and beautiful double top. Double top. We have broken above the head and shoulders right here, so the 1100 level is a very significant level in terms of price technicals, trend following, horizontal support, resistance. And look at this beautiful trend right here off the lows. Look at this: 1, 2, 3, 4. So we're coming right down to a beautiful buying opportunity. We'll probably, if we get a washout late in the session today, maybe early Monday, we'll see how the market dynamics fare. But Actually, we can look at the sentiment indications right here. See quite a bit of fear right here in the sell-off. Quite a bit of fear in terms of the equity call value ratio, and not so much the case of the VIX. The VIX kind of bouncing along. We need to get some spikes in fear there to the upside, but no real indications right there suggesting. Did go to a short position right there. But this is actually what we're talking about. This is one of our favorite new swing systems. It's been performing quite well. Beautiful short setup, buy, short setup, flat, short setup. It's kind of scratches right there. We'll take away that one. Another beautiful long position. Went short right before this little errant move up higher. And we can go ahead and actually see how this portfolio is done. Look at that beautiful $65,000 in profit since September of '06. So beautiful swing system right there. That's actually part of the ultimate portfolio. The MSAU portfolio, that's the swing system that's been factored out in terms of the MSAU DT, which you factor out the swing, you lose $5,000 in margin, you only need $10,000 to get started, and then you're left with 6 day traders with margin of about $3,000 in margin, gives you about $7,000 in drawdown cushion. On the portfolio, on the MSAU DT. Those are some of our most popular newer portfolios. Essentially went through and picked out all the best performing models, the creme de la creme, the cream of the crop, if you will, and just put them together in a portfolio. They're all breaking out to new equity highs. Many of you are already aware of the MSAU portfolios. Nevertheless, back to the S&P 500 daily chart. Certainly a great opportunity to really get long here from 1100 to 1110. We're going to hold off a little bit. Maybe we can get a washout. We're going into, it's the summer. It's the summer. We're going into September. We'll see how the market dynamics play out. But right now, neutrality in terms of directional movement. The momentum is bullish in all time frames. The trend is bullish in all time frames. So any other time we would certainly be bullish back in the market. But we're going to give it a little bit of a pause here and probably get long around 1100 or 1110, but we'll wait again and see how the market dynamics fare. Okay, we're running out of time, so that's the market right there. We're going to look actually, we'll go ahead and minimize. Let's see. Swing System 5.0, our favorite swing system. Really taking a pinch today, but look, when you get long at 10-100, you're still sitting on 400 points of profit for the Swing System 5.0, the venerable Swing System 5.0. But again, taking a little bit of a retracement there. But of course, as mentioned, if the bulls do remain in control, and this is simply a retest of the breakout level, trying to fill this little gap right here. So beautiful in the Dow. This, of course, is the Evo, staying away from the market. Essentially, why it's been quiet, but yet just getting in right, striking right when the iron was hot. And a beautiful long setup there was the case for 1110 to, we'll call it 1122.50. But that's a big part of the master portfolio, which is right here. Of course, gaining since September or July 12th, gaining 144.25% as this portfolio, very impressive portfolio, has been the gain. Of course, that's the 5K version. You can have a more conservative $10,000 version with, I think, a max drawdown of about 50%. This is a max drawdown of 100%, but look at the return. You're certainly doubling your return, and of course, you can get started with just $5,000 for the master. Actually, this was, I believe, Monday. Tuesday and Wednesday, we've actually had a couple losses to the tune of about $600, so you can go ahead and scratch this $600 right here. Essentially, it's been flat for the week of August, the first week of August. But there's kind of how we've been doing. We're really running out of time. There you see the MAPDT still leading the pack with 186% return over the last 22 days. But as you look over the last 5 days, pretty much flat yesterday. The standout was Triple Threat Trader HR, 5% gain. The standout the day prior was the Delta B, kind of a mixed day, slight gains. Bit of losses on Tuesday was the case. Average loss probably about 2%, something like that. Monday, average gains. The standout was DDTDS, 4% gain. And of course, last Friday, the standout was again the Triple Threat Trader HR, which certainly is impressive at 162.2%. So, right now, you can save 15% on any of our portfolios, or most of our portfolios, I should say. Just go to the website, click on your portfolio of choice, and all you have to do is add to cart and enter promo code VIDEO. And you're going to save 15%. We hope you enjoyed. If you have any questions, go to the website, chat with support team live, or shoot us an email to admin@MiniAnalyst.com, and we'll see you next week.